Good morning, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. Welcome back to October 13th as we dive into everything that's going on in the markets. And we're also going to be talking about ESG, or ethical and socially responsible investing, this week. It's definitely something you should be looking at, and we'll talk about why and why now and the reasons for that. I hope everyone had a great Thanksgiving and got their fill of turkey or turfuki, turfuki, which is my new favorite word of the week, by the way. Introduced to me by a vegan friend. I didn't realize that was a thing, and I've been trying to slide that word in everywhere I can. But I hope everyone had a good long weekend, and we're managed to stay safe out there. I know we weren't allowed to have the big gatherings that we normally do, but hopefully you had some time with your immediate family or your immediate bubble, and we're able to enjoy the weekend. I am broadcasting up from Whistler this week, where it was snowing. I was going to put it into the background, but the reflections are so light, it was kind of messing with the camera. So, it's funny to look out the window and see snow everywhere. So it's that time of year as we move into mid October into November. Let's get started. As always, the stuff we cover here is for your information purposes only. Don't take it as advice. Always do due diligence or talk to a professional about your situation and what might be the appropriate strategies for you. As always, you can reach out to us and ask any questions. If you'd like us to do a review, if you just want to look at some information, go to mikeonmoney.com. Go to our blog there. We have all these, all the videos that we do, all the different topics that we cover. You can access those there. You can sign up to our weekly reports and to these live weekly presentations, but also our deep dives that we try to do every Friday. The last week's was delayed, but it should be up very soon. But you can go there and ask us any questions. If you're watching this on the replay, of course, you can send in your questions or give us a shout. With that, if you're watching it live, click the Q&A button. If you have any questions, just let us know. If you think of it afterwards or you prefer to send it in, do that as well. We'll endeavor to answer any questions you might have. And if you have any topics you'd like us to cover in more detail, send us that as well. We're always happy to build those into our presentations. A lot of times we get some of our best ideas from you. And we can cover those in more details either in the Friday videos or in person if it's something specific to your situation, or on these Tuesday recordings. So let's jump into things and see what's going on out there. This week we are looking for the CPI numbers. Actually should be out today. BlackRock, Citigroup, and JP Morgan Chase are announcing their earnings this week. All expected to be a bit of a hit on the banking front. Interest rates are really, really low, so margins or profits will be under pressure. I was reading some pre-market numbers this morning. Not the full reports from those three, but it looks like they'll be lower than expected for Q3. But not a big surprise. Again, a lot of what they do is the London numbers are up as people. We do see that real estate market still fairly active, but we do see the margins for the corporations being much lower than they generally enjoy on their loan books. Also this week, things going on. Of course, voting has started in the U.S. We keep on talking about November 3rd being election day, but of course it does start. Before that, the mail-in ballots have been already started, and some early voting sites have set up. Georgia set a record for their first day of early voting. Wait times were into the several hours in some areas, and that was going to be expected in the U.S. Because they have closed down a lot of the sites in different areas, and also limited number of people to staff them just due to COVID and not being able to have that much face-to-face contact. So do expect to hear a lot of reports of very long wait lines. Okay, sorry about that. We had a little glitch. Let me get things going again here for us. Where were we? We were here. Sorry about that. For some reason, my internet cut out just briefly. So here we were. So we're talking about Georgia. Of course, other updates. Trump has the reports are that Trump has tested negative for COVID-19. Yeah, after being in the hospital for a few days last weekend and coming out on Monday, and he's back on the road holding live maskless rallies. So we'll have to see how that plays out. Hopefully all well. His doctor came out and confirmed that today. Trump, I believe, had said it yesterday. His physicians weren't willing to confirm it yesterday. They did, however, come out today and confirm it. So, or at least one of his physicians did. So we'll keep an eye on that. California elections demand that state GOP remove ballot boxes. So this is, things every day on this U.S. election are crazy. So the Republicans in California put out ballot boxes that people could drop in their mail-in votes, but they're not legal. They're not the actual official mail-in boxes. They look like the official mail-in boxes, but they're not. So California Elections has ordered them to remove them all, of course, and return any ballots that were dropped off to them mistakenly. So anyway, more and more controversy around the U.S. election. Of course, it's going to be daily as we get closer and closer, because this one's for the record books as far as I think the back and forth around the election itself. Trump and Biden campaigns, kind of hit they're both out there traveling quite a bit. They're, expanding the battleground maps as they try to win over some key states. Of course, they've started the hearings for the Supreme Court nominee, and the Democrats and Republicans have clashed on that, and that's going to continue through the whole process. Of course, the Democrats trying to stall it, Republicans trying to get it through as quickly as possible. So we'll watch as that plays out. And then renewable energy stocks here are getting a Biden bump. We'll talk more about that near the end here with the ESG and why we're seeing that and why the market, that particular area of the market, is preferring Biden. Some other insights, treasuries are on steroids. So treasuries, U.S. bank mortgages and bonds, there's a lot of trading happening there. Some record numbers of volume. A lot of it amid the polls showing a Democratic win, or a potential Democratic win going into this election, because of the Democrat stimulus package, which is a lot more generous than the Republicans. So if they were to win in January, we'd probably see a lot more stimulus coming through. I think the numbers are now about 2.1 trillion. They're looking at doing, and that's would cause the Treasury numbers to come down. So there's a lot of trading happen ahead of that. Trump steel tariffs, no surprise here, has brought job losses to the state of Michigan, which is a swing state during the election. Of course, in 2016, there was Trump's big push was that he was going to bring back those Midwestern state jobs, including Michigan, and really help the struggling industry. The tariffs have caused the opposite to happen, and so he's on the road trying to deal with that in Michigan as well. We're also seeing, more and more of the vaccine trials. We're going to talk a bit more about J&J's trial going on hold, Johnson & Johnson's trial going on hold, but around the world, the race for the vaccine is trying to get turned around in record time. Obviously, there's a lot of public concerns about the safety of the vaccine, of how much testing, but there's, I think the latest number I saw was about 40 different vaccines that are in human trials right now. But the companies out there are staying committed to doing strict testing, staying to scientific method before they go out. And we're definitely seeing the insurance companies, they haven't really changed their assessments of risk. So they have some confidence in those trials, and they don't have any major concerns. as of yet. So we'll keep an eye on that, because the insurance companies will react first, because of course their risk would go up if they had a lot of concerns. What are we seeing out on the wealth news? We are seeing, some hiring slowdowns. We've talked about this. Unemployment is one of the key numbers we're definitely tracking right now, unemployment and inflation. We have seen steady job improvements since the low of the first shutdown. However, they have been slowing dramatically. We've not seen the rates that we'd like to see, especially in the US market. And now we're starting to see the seasonal hiring, which we normally see through the holidays, is slowed almost completely. Of course, retailers haven't bounced back as much. The second wave of shutdowns, or the concern around the second wave of shutdowns, is holding people back from hiring as well. So overall, not great on the job front in the US. We're still seeing some improvements, but with the second wave coming, or in the middle of the second wave, there is some concerns that those numbers haven't improved enough in the US side of things. And we'll talk a bit about Canada in a moment. The global tax talks has kind of collapsed. This is global countries getting together to try to figure out cross-border tax rules. They were committed to continue to talk into mid-2021 in order to come to an agreement or come to a consensus. That has stopped for the time being, or slowed, and it could cost global economy about $100 billion, because there is obviously a lot of global trade going on. And that will just continue to grow, obviously with COVID, as people do more and more e-commerce and supplies coming from all around the world. So we'll keep an eye on that. Hopefully they resume and we can come to some kind of global consensus there. Stock lenders are having some troubles with the short-end market. We talked about this when we did our deep dive into Tesla. There are hedge funds out there and individuals who strictly will short stock. So that just means they sell it without owning it, and their idea is that the stock's going to go down and they'll buy it back at a cheaper price. And you have to borrow stock in order to sell it, because you don't own it. There is a whole market, there is a whole area that just lends out the stock for the short sellers, and that's where they get the revenue from. But with the markets rebounding with the government stimulus packages, short sellers have covered and aren't shorting until they find out what the next stimulus package is going to look like. And that's causing a decline in revenue to that area of the market. So, that goes back to when I mentioned Citi and JP Morgan, Goldman Sachs. They're all big lenders of short stocks. So their revenue has been hit in that category as well. Investment strategies have been hit as well. Throughout this, we've been talking about being very targeted in your portfolios, not doing kind of that buy and hold, or sticking with certain sectors that may not come back for a long time. We saw the big sell-off in some areas, have not come back. Other areas have. A lot of fund companies out there, managers, are trying to shift their portfolios mid recovery, which is really difficult. Obviously, it does do damage to the portfolios when you're trying to shift tracks. And also dangerous, because if we did go into another big pullback, if they would have shifted away from their defensive position to an aggressive position, they would get hurt twice. So we're keeping not affecting our portfolios. If you have some externally managed mutual funds or hedge funds, or especially any equity fund, and you have any questions about how yours is doing, or what style it is positioned in, feel free to reach out to us. We're keeping a track and kind of list of the ones that are more at risk of those kinds of moves. Pelosi and Mnuchin have still failed to come up with a real deal on kind of the COVID-19 second round stimulus package. This was the one that Trump said he was going to shut down until after the election. The market did not like that news. He backpedaled a little bit on it. They were trying to do, as opposed to a broad base, they were trying to do a targeted, focusing on certain sectors, the airline sector, for example, being one of them. And so negotiations resumed, but they have not been able to come up with anything solid or agreed upon there. So still some pressure on the market without that package, that stimulus package. And even if they do come out with one, it could be changed depending on what happens in the election as well. So we won't hold hold that to the portfolios these anyway, because there's only a few weeks before the election. What's happening around the world as far as COVID goes? Of course, the numbers we're globally we're seeing definitely a second wave. UK getting hard hit. France setting record numbers. I think I saw Spain had more people in the hospital now than the first round. Italy's, again, Italy just passed a law. You can't even go outside without a mask. Of course, the US, and even here in Canada, we're definitely seeing a second wave. BC still faring better than other areas in the country, but we're still seeing an increase in those numbers. Prague set I think it's the highest number per capita new infections. So we're definitely into a second wave. We're starting to see a lot more shutdowns happen globally. Here in Canada, I think I mentioned last week, Quebec has gone into shutdown again until I believe it's the 28th, at least until the 28th, and they're going to reassess obviously along the way, but they're still posting 1,000 to 1,100 new cases a day. Certain areas of Ontario have just gone into further shutdowns again. And BC, we'll have to see. There's obviously a lot of talk. If things don't improve, we might have to go back to some restrictions, maybe not as many as before. It's all open. It's all in debate right now. And of course, we're still watching the schooling situation very closely. We are seeing outbreaks in schools. We are seeing cases in schools. They are approaching it very targeted. So they're, doing contact tracing, quarantine, having those who are exposed quarantined, while keeping everyone else, I was going to say normal schedules, but the new normal schedules, because it's not normal schedules in the schools right now. So they are focusing on that. Universities, many of them have now said their winter term will also be online. And we're really seeing obviously we've seen the economy being affected, and now the universities, especially those universities that heavily rely on international students, where those numbers are dropping off, not just this year, but the applications for next year, which will be starting in the next month or so. They're expected to see those drop off dramatically as people going into the unknown. They're favoring more local universities or staying local for the time being. So we'll have to keep a big track on that, because that does affect the economy as well in those towns where the universities have the influx every year of students. So let's take a look at the markets. The stock's gained a little bit of hope on Monday. We're seeing it come off a little bit today. As the polls, and again, these are just the polls. I don't want to put a ton of weight on the polls. The swing states are really hard to anticipate, but it is leaning towards a Democratic victory when it comes to the presidential election in the United States. As we talked about, the treasuries have edged higher, the dollar a little bit weaker, gold pushed up. All the trends that we've kind of seen. The U.S. dollar was trending up slightly until Trump was diagnosed with COVID, and then the longer term trend, the trend that we expect to continue as a weaker U.S. dollar. So that's kind of gone back to normal. Crude prices fell a little bit, of course. So we mentioned last week the Norwegian offshore shutdown due to strike of their supply. Edged up slightly, and we saw that come off a little bit. We did see yesterday go up a little bit again. We'll talk a bit more about that, but that was just with the storms in southern United States causing temporary shutdowns of production down there, as they always do due to storm. Apple is having another event. It's supposed to be announcing their iPhone 12. Obviously, they try to always get these things out before the season. I haven't actually seen what the announcements have been or any differences. We'll definitely mention it or cover it a bit for next week. But it's supposed to be a 5G phone, and it's supposed to be a little bit cheaper than last year's new phone. Although there is a lot of controversy saying that the network in the United States and Canada hasn't actually been built fast enough yet to actually use its the full capability of that 5G. But we'll have to wait and see as we're looking for for further details. Mentioned JP Morgan, they're expected to have dropped earnings. Those numbers are coming out right now. I just haven't had a chance to go through in any deep detail, but not a big surprise there, and Citigroup as well. Also going on the U.S., Goldman Sachs financial targets are jeopardized due to slower numbers during the pandemic. Covered a little bit of this already. They'd set their targets earlier in the year. Obviously, they're different areas of the market. We mentioned the short lending has been hit, the lower interest rates affecting them. So they will be coming out here probably with some new guidance. On the opioid drug manufacturer, obviously the opioid crisis, we've talked about a few of the other companies that have been affected by these lawsuits. Canaccord has filed for bankruptcy. The claims are just more than they can afford, so they'll go into bankruptcy and pay out whatever the court's deem is they're able to pay out from their assets and from cash, and the rest will go to creditors. Twilio is to buy a marketing cloud for Segment, which deals in customer data. These are just some more. We've talked about mergers and acquisitions being on the rise in these types of markets. We're definitely going to see a lot more. In fact, I have a couple more here to talk about. Twilio is buying one. So really, really hot in the markets these days is client data, right? Mining client data, figuring out their trends, figuring out, what they're looking for and how to target directly to them. This is always in the news about different companies collecting our data. And this is why companies want it, is that they can target their marketing campaigns and their products directly to where it's in demand. Abbott Laboratories has come out with, they've got an emergency use for an antibody test for COVID-19. So if you've been following the antibody test, this is not a COVID-19 test, kind of it is, not directly. It's to see if your body has the antibody. So it usually means that you've had COVID-19. So some people might have gone asymptomatic. The body fought it off. You have the antibodies in your blood, and this test would say confirm that whether you've actually had it and recovered to say if you have antibodies. That might be just for you, for you and your doctor to know whether you've had it and that you've gotten through it. But also people donating their blood with antibodies in it is used in the treatment in many cases, and also used towards vaccine. So we have a new test out there for that. Facebook has been pushing for the Libra. This is their cryptocurrency. This goes back a couple years when Bitcoin was big in the news. Of course, cryptocurrencies are still there, and Bitcoin has still been pretty active, especially through this, as people are concerned about different economies and all the money that's being printed around the world. So cryptocurrencies have been out there. Facebook wanted to come up with their own cryptocurrency called Libra, which would be for buying and selling, people exchanging for services and goods through the Facebook family, through their apps. They have their marketplace. They have their services, and of course, Instagram and Facebook. And there's a lot of pushback by global economies because this would be a direct competition to banks if Bitcoin came into the mainstream, or sorry, not Bitcoin, a cryptocurrency came into the mainstream usage, because it's not really mainstream usage yet. Usually, it's pretty much used for, I want to say, tax evasion. A lot in the criminal underworld, not all of it. Obviously, people, legitimate companies and a little bit legitimate trained in current cryptocurrency happens, but it still hasn't kind of moved into the mainstream. So Facebook's been trying to push it through. Been a lot of pushback by the G7 to stop that due to potential, pressures on currencies. But also it's really not regulated. So that causes a lot of problems, not just for the G7 or the established financial institutions, but for people using it, because it's not regulated. There has been a lot of fraud in cryptocurrencies. There have been a lot of people have lost a lot of money due to theft, due to Ponzi schemes, all different kinds of things. because it's not regulated. So, it's kind of two-pronged. The financial institutions definitely want to regulate it so that it can be more on a fair playing field with traditional finance and banking, but at the same time to protect people who are using it, which kind of goes against what cryptocurrency kind of started as, which was to be completely unregulated. But there is a push to have some sort of regulation around it in order to make sure people are safe. So that's being pushed back pretty hard right now, but it is still on the table at Facebook. Canada, no major events. We are still keeping a very close eye on the job numbers we talked about just came out, and of course inflation numbers. One thing I didn't get in here is Air Canada is going ahead with the purchase of Transat Airlines. This is again just another story in the long stream of mergers that were announced pre-COVID and then got renegotiated. So pre-COVID, Air Canada had made a deal to buy Air Transat, and that kind of got put on hold. Obviously, with everything that's going on in the airlines, they managed to renegotiate a lower price, and Air Canada is going ahead with that purchase. So we'll get more details as that comes out. But just another transaction that's being renegotiated because of the pandemic. The Canadian job numbers came out. They were actually quite strong for Canada, which is good. Reading into them, good and bad. So the job numbers came out stronger than expected. Unemployment did fall to 9%. 9%. Hey everybody, hopefully I still have you. I really apologize. I don't know, my connection's usually a bit better up here. Must be part of the snow stuff. So anyway, I'll try to get through this without another interruption. I apologize. Thank you for sticking around. Where would we end off? There's job front. So not great in the sense that those jobs are definitely on kind of the part-time or low end of the economy that have come back. So Canada, the tipping point, Trudeau coming out kind of saying that we're at the tipping point. We're definitely in the second wave. The numbers are there. Healthcare workers are increasingly swamped. Of course, keeping a very close eye on those hospital numbers. They're still pretty good in Canada, but definitely increasing. So we want to keep a really close eye on that. Again, talking about mergers and acquisition, G4S which is a private security firm, is making a run at Allied Universal after Allied Universal was already under a hostile takeover with Garda World. So competition now starting to build up in the mergers and acquisition field as people are trying to buy up deals while valuations are lower. Canada's launching a new business aid program to help with rent relief for businesses. The previous one is expired, and so they're working on rolling out a new one. We're looking at all the details there, and we'll keep you up to date on that. So Canada continued to try to support the economy and businesses out there. On the exchange front, we mentioned that the greenback or the US dollar rose slightly last week and then started to pull back again. So pretty much flat, 0.2% rise and then pull back. So again, our outlook is downward trend. The euro did see them drop to about $1.17 to the US. They do expect it to be about $1.20. Obviously, with Brexit negotiations coming, the October 15th deadline looming here, we're seeing a bit of pressure on both the sterling and the euro, which could work out well if they get the agreements in place by the 15th. If they don't, obviously there's going to be some downward pressure. with a hard Brexit. Canadian dollar is up slightly from last week at 0.76. So a little bit of move there as the US dollar pulled back a bit against us last week. On the commodity front, we talked about oil. Really no big moves there, a little bit ups and downs. We did mention the Norwegian strike has closed down theirs, and the hurricanes in the United States had closed. We had a Libyan blockades shut down some production temporarily on the weekend. So all those things push it up temporarily, not very high or not by very much, and we're seeing that pressure come down again. We're also seeing the Libyan supply, which we focused on. They've been pumping out more than they were supposed to under the OPEC Plus meeting. So we'll keep an eye as OPEC continues to try to put a pressure on the world supply. So let's talk about ESG investing, or ethical and socially responsible investing. We did do a deep dive on this earlier in this year. I wanted to bring it back up because it is something to keep an eye on. We're focused on it in the portfolios, not just for the good reasons that we're seeing. More and more people being aware of the environment, and I saw a statistic saying that 2020 is going to be the lowest carbon output in I think it was 5 decades, just because of all the shutdowns we've had this year, and obviously during the pandemic shutdown earlier in the year, we saw air quality increasing, we saw water quality increasing around the world. Wildlife kind of returning to areas that it hasn't been in decades. So all those positives has certainly turned investors' minds to ESG investing, but also countries. A lot of the stimulus packages globally have been focused on rebuilding the economy in areas of ESG or clean technology, which is good, not just looking at from an environmental standpoint, but also from an economic standpoint, because if you followed kind of our story around oil and gas, and again, we did a deep dive earlier in the year, you can check out those videos at mikeonmoney.com, but oil pre-pandemic, by 2030, it was predicted that the oil demand globally was going to come to an unrecoverable level. That doesn't mean oil was going to disappear by 2030, just simply that supply would outpace demand by 2030 due to other technologies and cleaner technologies taking over around the world. And that's really just a price tipping point. When we talk about ESG or cleaner energy, it really comes down to, how much does it cost? So 10 years ago, if you're talking about solar or cleaner energy, it was more expensive, way more expensive than using oil or even coal. And as those technologies got better and more efficient, that cost comes down. And we're now at the tipping point where those costs, in many cases, are cheaper than oil or coal, or in a lot of cases, even natural gas. So the economy starts to shift because people and companies will invest into that cheaper technology where it pays off in the long run. So we're at that tipping point, and the pandemic has certainly caused a surge of investing in that area, not just by governments, but by companies taking the opportunity to shift during the shutdown, during kind of this reset button, to the cheaper technology, to the cleaner technology. And that's been good for investors and will continue to be good for investors. As you can see by this chart, if we look at it compared to, kind of the S&P 500 kind of being your baseline, and the MCI index, which is a global index, Refinitiv, which is Thompson 1 index, you can see that sustainable analytics of the sustainable companies have kept up or outperformed in some periods in the recent years, due to the interest being shifted, but the money being spent there, and the companies investing in switching to that technology. So much as we saw coal, been on a steady decline for almost 2 decades, as other technologies, cleaner technologies, come to replace it. Now we're seeing fossil fuels in general being weeded out and phased out. And it's coming in many different forms. It's not just, people will think about electric cars or solar or wind, but it's more efficient electronics, so using less power. Lighting in our homes now, you can switch to the LEDs, which, the quality of the LEDs have changed, really driving down usage of power. So cleaner technologies in all areas is driving this ESG market up. So investors can now pick, through their own beliefs and their own, wants in their portfolios without having to take a lower rate of return, which, 10, 20 years ago, that was the conversations with clients. Those who wanted to be ethically invested in their portfolios had to take in a lot of cases, a lower return because the profitability wasn't there yet. That is shifting now, and we're seeing that in the returns. The other big factor, especially in the last couple of weeks, is the Democrats under Biden in the United States have $1 trillion package to invest in this new clean energy or ESG type of companies. And that will be a big shift. We talked last week, we talked about what the election means and different sectors that would do better under, different leaderships. Not one necessarily versus the other, just different. And obviously the current US government mandate is not around clean technology, whereas the Democrats would be. So that's been very, very favorable. As the polls have started to shift, we've seen a surge there. So it's definitely something you should be looking at in your portfolio. And really from an economic standpoint, this shouldn't be a political issue. I know in the United States it is a political issue, but it shouldn't be a political issue. And let's put that political issue aside. From an economic standpoint, going back to my comment of fossil fuels kind of being predicted that by 2030, the growth would be on a steady decline by then. That seems to be have accelerated by the pandemic as countries, including Canada, who are now, taking the opportunity of this decline to invest money more into ESG or cleaner technologies, as opposed to trying to recover all the jobs in a sector, declining sector such as fossil fuels. That, it's a smart decision regardless of your beliefs, because those jobs around ESG or the clean technology, those are new jobs. Those are going to be around them for a long time, and it's a growing sector, meaning there's going to be more and more jobs. So the more people you're training in those areas, the more opportunity you're creating for them in the future. Versus if you pile a lot of money into a sector that's on the decline, and again, I'll go back to coal as an example. If you go on a decline or invest in a declining market, you're training people up, you're creating some jobs that might not be permanent because it's already on the decline. You might bring a few jobs back for a while, but the declines continue, and so those jobs eventually will disappear or shrink. And you've now trained a bunch of people in a dying technology or in an area, a sector that's not growing, which hurts your economy in the long run. You're much better off, obviously, bringing specialty, bringing expertise into your country that is in a growing sector, especially a global sector such as this. So really a great area to look at and invest in. If you're interested in it, do reach out to us, because there is a challenge for Canadians. Canada does not have a huge ESG market. And ESG, keep in mind, again, on a deep dive, I talked about this, can mean a lot of different things to different people. And really defining what it means to you or what it means to your portfolio makes a big difference as to what you look for. For example, Suncor, which is one of our largest oil companies in the oil sands, technically falls under the ESG umbrella because they're the best of the worst, if you want to look at it that way. They rank the highest out of any of our oil companies under an ESG microscope, but that might not be what you want in there. So, you want to be careful what you're buying. Canada, because we are a smaller market compared to the globe, there is more limited opportunities. So I do recommend, if you want to do ESG, that you look globally. That doesn't mean you cut Canada out completely. By all means, there's a lot of good opportunities in Canada, but do look globally, because there are more opportunities out there than just Canada. much more diverse opportunities out there. And it's good to see Canada playing in that arena. But so far, our market isn't huge there. Similar if you're looking at pharmaceuticals, Canada's not a big player in that market. You'd have to go outside of Canada to really play in it. So do take a look at ESG. Thank you for your patience with my connection cutting out in and out this week. I'll make sure I got that all fixed up for next week. With that, I'm going to let you go. Enjoy your day. I know the weather's not great there, but do know it's nice and at least white up here. And I'll be back in Vancouver midweek this week. And as always, reach out, let us know what you're doing. And I hope you all had a great Thanksgiving. Take care. Talk again soon. Bye-bye.